Welcome everyone. Good afternoon. Thank you for joining our session today on safety and SIRS, reserves to the rescue. Your time is valuable and I appreciate you being here with the intention of leading your communities with more clarity and confidence. We'll get started in just a moment. While we wait, let's take a moment and just try to focus and remove distractions around you. So go ahead and close any doors that might be open, turn on do not disturb on your phone, or try to remove as many potential distractions as possible so we have your undivided attention and make sure you get the most out of our time together. Now, before we dive in, I want to set clear expectations for this webinar. By the end of today's session, you're going to walk away with a clear understanding of what SIRS actually requires, where many associations are currently exposed, and what steps you should be taking immediately to properly plan and protect your community. Because the reality is, most boards don't necessarily have a reserve problem. They have a clarity problem around what's required and what happens if they get it wrong. And that's exactly what we're going to be going over and solving today. Before we dive in, as we give everyone a moment to join, let's go ahead in the chat section. Go ahead and let us know how long have you been serving your community and working with associations. So how long and what city are you joining us from? In the chat section. Just want to make sure you guys could hear us. So if you could answer that. 5 years Miami. Thank you, Randy. Okay, Sandra, I see 3 months from Delray. Douglas, all right, here you guys go. Connie, excellent. Anthony, thank you. Rachel, 13 years, Palm Beach County. All right, Susan, 3rd year, awesome. Barbara, Martin, thank you. Roger, all right, thank you, thank you. We see 8 years from Sharon. We got Kathy, we got Brian. Excellent, 26 years. Well done, Vanessa. And then I see Emily. Excellent, guys. Thank you so much. So we appreciate everyone sharing that information. We're going to go ahead and get started. Let me start off by introducing myself. My name is Michael Manrique. I'm the Director of Business Development and Marketing with Affinity Management Services, and I'll be the host for today's webinar. At Affinity, we work closely with boards across South Florida, and one of the most common conversations we're having right now is around reserves, funding plans, and SIRS compliance. So this topic couldn't be more relevant. I'm joined today by 2 experts from Reserve Advisors, a nationally recognized firm specializing in reserve studies and long-term capital planning for community associations. First, we have Casey. She's an account manager. Casey works directly with boards and associations to help them understand their reserve studies, funding plans, and how to align their financial strategy with long-term building needs. Also joining us is Jordan Rosales, Regional Engineering Manager. Jordan brings the technical and engineering perspective, overseeing reserve studies, evaluating building components, and helping associations properly plan for structural and capital needs. Together, they bring both the financial strategy and the engineering insight needed to truly understand SIRS. Before we jump into the content, I want to quickly cover a few important CEU details. This is a continuing education session, and to receive credit, you must attend the full session. And we'll be providing a QR code and link so you can complete it before we wrap up this webinar. The goal is to make this as simple and seamless as possible so you can receive your credit without any extra steps afterwards. Now, something I want to note, watching the recording of this session does not qualify for a CEU credit. So we'll be addressing questions throughout the webinar, but we'll also save some time at the end as well if time permits. All right, now that we've kind of set the stage, let's dive into the content. This topic really requires both financial strategy perspective and a technical understanding of building components, which is exactly why we have Casey and Jordan here with us today. So go ahead, guys, take it away.
Thank you so much, Michael. Hopefully, okay, we have the screen live. And I do want to mention, this is a continuing education course for managers and board members alike. We do have an approval from the DVPR to give board members credit for this course. So feel free, if you are a board member, and I saw there were some quite tenured board members on the chat. Thank you so much for being here. We can get you a credit, 1 hour credit for this as well. Process the same, just hold off until the end, watch the full course, and then fill out the link or QR code questionnaire that we're going to share. Like Michael mentioned, my name is Casey. I am an account manager with Reserve Advisors. I work directly with associations and trying to help them understand the needs around SIRS and reserve studies. And before I was actually in this role, I worked closely with contractors, and that was what I did beforehand. And I can tell you firsthand that because I was, those guys were my clients, and I can tell you firsthand how much their materials cost and how much time it took them to complete these projects. And their clients, which were condo associations, would obviously feel that pressure. And so it's just so important to be prepared, and why reserves are so important, and why now we have SIRS, which the state has introduced as a requirement. Jordan, do you want to quickly introduce yourself as well?
Sure. My name is Jordan Rosales. I'm the regional engineering manager in the Florida region. I've been with Reserve Advisors for 5 years, completed 400 plus reserve studies in 17 states and 3 countries, and have been involved with SIRS since the beginning, since it rolled out in late 2022, early 2023. So pretty well versed with the changes that have gone on over the past 3 or 4 years. We're happy to catch you up and let you know what those requirements are. And we're happy to help you after today as well. So I'm looking to be a resource and hopefully educate you and learn something today.
Wonderful. Thank you. Perfect. So just quick overview of the agenda today. We're going to go through some like a SIRS overview. So what is SIRS and any House bill changes, which this year the legislative session did wrap up in March, and there have been no major changes as it pertains to condominium associations, which is great news. But the past couple of years have had major changes, and SIRS has been rewritten a million times, and so there's still a lot to learn from those previous changes, and so we're going to discuss those. Reporting requirements, disclosures, incorporating SIRS into the budgets, where Jordan's going to jump in and talk a little bit about budgeting, waiving partial funding, restriction on reserves, and where is that allowed within the SIRS world, or if it is, funding strategies, and then the completion, and what is considered the completion of a SIRS. So just to kind of give a bit of a review of how this came to be, right? Reserve studies have been a thing for many, many years. Reserve studies are not a brand new concept, but structural integrity reserve studies, which is what SIRS stands for, is a newer concept. And it really happened as a result of the Champlain Tower tragedy that happened in Miami. And what the law said is that it was just a little too easy for some associations to waive these funds or not incorporate funds for needed components that affect the structure of a building. So what happened specifically with Champlain Towers is that they were using their funding for more curb appeal items, like they had a brand new lobby, and you walked in and it looked great, and maybe it drove sales, sales of the units. However, everything else was sort of being pushed down, the can down the road, and they were not looking at the concrete columns. They were not looking at plumbing and all these things that eventually led to the structure of the building to be completely just to collapse, essentially. And so what the state said is that now we're going to allocate funding for these crucial items that if they are compromised, then the whole building is compromised. So we're going to fund for these structural components, and we'll go over the list of what those structural components are, so that you have a clear understanding of what to expect to see in your SIRS. They also raised the threshold on waiving the reserves for non-structural components. So before, you could waive the reserves with a majority of quorum, which could be any group of people that show up in a board meeting, but now you need a majority of the whole membership. So every single voting party in an association now has to vote in a majority to waive those non-structural reserves. And then, of course, now you need independent inspections and opinions. So you need a maybe a retired engineer that is part of the board, was doing the reserve studies for their communities before. Well, now you need an actual professional to conduct that for you. So what is considered structural? This is the list that the state came up with. So if these are part of your community, if you have a condo that needs a structural integrity reserve study, if you have your roof structure, which structure could be load-bearing walls, right? Any type of concrete structure that's holding up the building, fireproofing, fire protection systems, plumbing, electrical systems, waterproofing and exterior paint, windows and exterior doors. This list is what the state is saying. If these are part of your building, you're going to see these in your structural integrity reserve study, and you need to fund for these items. And another one off is that any item that has a deferred maintenance expense or replacement cost that exceeds 25,000, and if you do not fund for it, or if you do not pay attention to it, essentially, it's going to affect the building negatively. And actually, the 25,000 was introduced last year, because prior to that it was 10,000, and due to inflation, now we say, I think it was 2002 or something like that, the 10,000 was introduced. But now with inflation, we're saying anything 25,000 at least needs to be included. And every year is going to go up a little bit according to inflation. So I think currently it's like 25,600 since this was introduced in 2025. So we're looking at that range. You don't have to exclude things that are less than 25,000 if you feel that they are necessary in your community. If it's a small community that, a cost of 15,000 is a very big chunk of change for homeowners to put together because they only have maybe 12 units or something like that, then you can incorporate something lower than 25. But the state is saying at least 25,000 is the threshold, anything 25 or above, but you can incorporate things that are a little bit less if you think it's needed. And so what does this really mean? What are these items that if they're 25 or more, you have to put them in if they affect the building? I'll take the example of a pool. If you have a pool that's over units, it's not on the ground, but it's over maybe a garage or homeowner units, then that pool is very crucial to the structure of the building, because if something happens to the pool itself, it could affect the integrity of the building. So that would be considered now a structural integrity reserve study line item. And it can apply to any of these if they're somehow connected, and this is up to the discretion of the engineer that's doing your SIRS. And now we're looking at what's not included. So everything else, right? So if you have a building with amenities, with, you have a pool on the ground, you have HVAC, elevators, all this stuff now goes into the non-structural. It's not to say that these items are not important and you shouldn't fund for them, but the state is saying if any of these items sort of fail, well, it's not going to affect the integrity of your building. If your elevator breaks, you're going to fix it because you need a working elevator and it's just inconvenient. Same thing with AC, right? HVAC. If your AC system's not working, it's just going to be inconvenient, but it's not going to affect the integrity of the building. So these items, the state's saying you can, and we're going to talk a little bit more about what that looks like. You can partially fund or waive with a homeowner vote, because you're not being 100% required by the state to fund it no matter what, just like you're doing with a SIRS. But that threshold has changed and it has become more difficult now to waive these reserves, right? You need a membership vote now. And as a board, you actually don't have to present to your homeowners the ability to waive. If you feel as a board like, no, we're going to waive these non-structural reserves, it doesn't even have to be an option that you give your membership. You can just follow the reserve study that you were presented and then just go with that. So who needs a SIRS? We talked a little bit about what the components are, but does your building actually need to get this new type of reserve study, right? It's any building, any residential building that has 3 or more habitable stories. So habitable would be a space you use to live, work, eat, cook, right? There's a actual definition that you can look up. But essentially, if you have a 3-story building and the first floor is all garage, then that actually would not, that would take away that requirement of the SIRS for you. Also, any single family, 2-family, 3 or 4-family dwelling where 3 or fewer habitable stories above ground are also excluded. So these smaller buildings are being excluded. Any portion of the building that has now been submitted to the condominium form of ownership. So sometimes you'll have like mixed use condos that, part of it is a hotel. That, part would now be required to get the SIRS. And any portion of the building that is maintained by another party, say you have a commercial space in your building, that would also disqualify them. And so what is actually included? So this is what you're going to see in your SIRS, and this should be somewhat consistent between any provider that you choose to hire to do your structural integrity reserve study. You should see the estimated useful life and remaining useful life for that specific item, estimated replacement cost, and deferred maintenance expense. So those should be in your expenditure sheet or your funding sheet when you're getting your reserve study. You should see these line items for each, or these components for each line item. Then we're going to include things on a 25-year plan, right? So we're going to look at the next 25 years, specifically for Florida's 25 years. Companies like ours that work nationally will also include the 30-year as a national standard. So you may see both depending on who you work with, shown in your study. And then we may recommend deferred maintenance instead of replacement costs for the entire component. And what this means is some components are not going to need to be completely replaced, right? You may need to completely replace an electrical box, let's say, but you're not going to completely replace your concrete columns. Those would need maintenance. And so sometimes we'll incorporate cost for what is deferred maintenance rather than a complete replacement. Who conducts the SIRS and when? So this is a little bit on that part of, now we need professionals to do the SIRS. It doesn't cut it if just, someone that used to maybe be an engineer does it for their community. Now we need either a professional engineer, licensed architect, a reserve specialist, or a professional reserve analyst. And when the SIRS came into play a couple of years ago, we saw a lot of general contractors or engineers get into the SIRS business, and they started conducting these, which is completely fine. However, those companies, if they intend to bid on any of the related services that they're conducting your SIRS for, they have to disclose that they intend to bid. That way, any conflict of interest is disclosed to the board, and they're aware of it. And then when should it be done? Well, ideally for buildings that have been already standing prior to 2022, you should have already gotten it done. It was due in December of last year. However, any new buildings that come about, and we're seeing a lot of developers even start getting SIRS, right? The building is built, it's done, it's newer, they're getting it, and then 10 years after that fact, from that point is when they have to renew it. So that's what the state is saying, that you need to get it at least every 10 years renewed or updated. Not necessarily that that's our recommendation as general practice. We would always recommend every 3 to 4 years to do an update as things change, but the state's saying at least do it every 10 years. Another thing that may have happened is when milestones were introduced last year as well, the state gave the ability to some condominiums that had urgent needs. The milestone inspection came back saying, well, you need to do these specific repairs. So the state said, well, you can pause your SIRS for up to 2 years and focus on those repairs now. And then when the time is up, redo your SIRS and start funding then. So if that is the case for you, you also may be in a sort of limbo time now where you've paused your SIRS. Okay. Reporting requirements. So within 45 days of receiving your SIRS, you should have shared it with the association and membership. They should have access to that. Electronic delivery as well is fine, but they should have access to the SIRS as soon as it was completed. And the state must also, or the division must provide a statement indicating that the study was completed, because we're also looking at reporting once you complete your SIRS. And we're going to show a little bit about where that reporting is done. If you have your SIRS, you should have done this, or maybe your management company did this, and or your manager took care of this, but you should also report it to the DPR, right? So you should post that you completed your SIRS on the DPR website, and you should hold that record of the SIRS for 15 years. So it's an official document. After you've gotten it completed, you need to hold that document for 15 years after its completion. Even if you do renewals, keep that document. And so this is the website. So condos.myfloridalicense.com. This was specifically made from the DPPR for condos. It's a more user-friendly website, and it allows you to just look at questions, certain information about what's happening now with the law in relation to condos. And you can also report, and this is that reporting page. And again, maybe your manager may be more familiar with this page. You know, you're required to create an account, load all your information, and report to the DPPR that you have received your structural integrity reserve study within its deadline. And then it looks kind of like this once you put that information in there. So this is a public information for everyone to go and look at. It is the reporting of all the condominiums in Florida that have gotten their SIRS and reported it. So you can look up your association, make sure the name pops in there. These are a few Naples, properties that we took a screenshot of. But anywhere in the state, this populates any county in the state. And so go in there, make sure that your community is listed properly, and that you're showing that you're compliant for your SIRS. And then disclosures during sale or lease. And so this is just to say, why is this important, right? We get a lot of this, well, what happens if I don't do this? Like, what's the repercussions? And the DPPR, it's not actively, they don't have someone in the office just looking at who's gotten it done or who hasn't. But if there is a complaint that is issued, which people can do in that website that I just showed 2 slides ago, could be your homeowner, right? Because you're supposed to share your SIRS with your homeowner, so they should be very up to date with everything. If there is some type of complaint that comes from them, then an investigation gets issued, and so that is when you start looking at dates. Were you compliant when the state required it, and have you been following your SIRS and all that? And another thing is, now, because it is so again, there's so much visibility around this. Banks are looking at it. So your mortgage companies, if you're trying to sell your unit and your condo is not compliant, you probably will not get approved, because Fannie Mae and Freddie Mac, that back up most of the mortgages in the country, most loans, they're going to be like, well, this is not, there's this a risk for us, right, to sell this mortgage to this person for this condominium. And so you get blacklisted by Fannie Mae and Freddie Mac. Realtors don't want to work with you. Even insurance sometimes has had issues on granting. So just make sure that you stay compliant, follow your SIRS. If you got, a SIRS report that maybe you don't agree with, connect with your provider and your reserve study provider, maybe get a second opinion, but ultimately you're required to follow that document and just address it as you go if there's any issues. And I will hand it off to Jordan for incorporating into budgets and funding.
Great, thanks, Casey. So I'll go ahead and say that Casey's portion was step 1 of checking the boxes and making sure you're compliant. And then what do you do from there? How do you actually incorporate this into your financials? It's very important. I know we're only in April here, but budget season will be here before we know it, especially when it comes to incorporating it. In the chat, I'm going to drop a link here. It might not actually work. We'll make sure you get it. Try that link if that. We'll send it after the presentation here. But DPBR, the division, just released an updated budget and reserve schedule training manual. that was updated to help you start to incorporate that. So that's a great start. I'd love to tell you that I know that front runs it backwards, but I don't just yet because it just came out a month ago. But it's a great start, and we'll use that to help guide you as the provider to incorporate in your SIRS. Next step from there, so step one, if your SIRS is brand new, it's easy, right? You're just going to take that number that we recommended and put that into your budget as the required structural integrity reserve contribution. It gets a little bit harder as you get to year 2 and 3 if you're on track or not. We're happy to help you with that. We'll get into that in just a second. But reserve amounts must be based on the findings and recommendations of most recent SIRS. General non-structural reserves can still be based on board estimates. So Casey alluded to, you can choose to fully fund or not non-structural amounts, of course, with the membership vote. And you can get ongoing proposals from contractors or board estimates to update that plan. With SIRS, you as the board are not able to update that without going back to your provider. So anything that significantly impacts funding, and that could be a gray area, right? Is it going to impact by $5,000 or $50,000? Where do we draw the line of large impacts to the recommendation? Of course, consult your attorney with that, but we're happy to help as a provider, and I'm sure going back to whoever provided your reserve studies will give you some updated numbers there. Associations may also adjust annual for inflation, any changes in estimates or extension of the useful life caused by deferred maintenance. So, for example, if you, I'll choose a balcony, for example, deferred maintenance of those is waterproofing. So if you completed that, that would extend the life of that balcony. So you could be able to defer that down the road. So pausing or using alternate funding plans, so Casey kind of alluded to this, you are able to pause funding if you are completing milestone inspection or milestone repairs that were brought to your attention by the milestone inspection for 2 years. It would require that you update your SIRS after the fact, but that is an option available to the board. Of course, it has to be approved by the membership as well with the vote. Something new that also came on in July is you can incorporate special assessments, loans, or lines of credit if approved by the unit owner. It's not a recommendation to do this because really you're just kind of kicking the can down the road for the next board to deal with. But it is allowed if you are in a predicament where funding is tight. You're able to incorporate your line of credit or your loan as contributions to your SIRS when applicable. And the last bullet here is kind of the gray area that the division has not quite made a stance on, but we're happy to provide our opinion as well as I'm sure your attorney is too. So pause or variation for the plan triggers need for an update to the SIRS. So let's just say your SIRS is 2 or 3 years old. You spent more than you thought on a concrete restoration project or a facade project. Would that trigger the need for an updated SIRS? My answer to that would be yes, because now you've deviated significantly from that plan. So what we would do is we offer, and most providers offer, a level 3 level 3 report that is an update from the office. You don't need to come out and do an inspection. You would give us those costs, share your financial information with us, how much money you have in the bank, and we would give you a new recommendation that you could then incorporate into your budget. So there's always that option if projects start to skew either higher or lower than you thought. An update is probably warranted. Next slide here. Are pooled reserves allowed? Yes, they've always been allowed for I would say the recent past. As we know, around 2002, it was component method or straight line method was the norm in Florida. We've gotten away from that, and pooled reserves actually allows more flexibility. So pooled reserves the board can switch or choose between accounting methods of pooled or straight line. Most are switching to pooled, like I said, due to the flexibility. However, I understand that sometimes if you're in that transition, it's hard to get the new mindset of letting go of what that money is assigned to a certain asset. So, for example, your roof. your facade was previously likely in its own account or its own bucket. But now we're pooling those, which allows more funding, especially when SIRS, money that's allocated to SIRS must be spent on structural items. It can never go backwards to non-structural. So this method allows flexibility with those projects of being able to pull the money together and spend it as needed on large scale projects. So getting into funding strategies here, we'll get into fully funding in a minute. I will say it's kind of more confusing. That I hear that term often either used most likely incorrectly. So I'll touch on that here in a second. But these definitions were pulled from the International Reserve Study Standards to kind of help us understand what these strategies mean. So I'll start with baseline funding. It's probably the most allows for the most risk. So essentially, it's in the cash flow method. There's ebbs and flows of the expenditures, and so we're just saying that we need to keep that reserve balance above zero at all times. We can draw it down to $0, $1, $10, but it always needs to be positive. As you can imagine, that would be allow for the lowest recommendation or contribution to the reserves. I will point out that in the recent Fannie Freddie update that came out the last couple months, baseline funding is not accepted by Fannie and Freddie anymore. It is accepted by the statute, which is contradicting. But as far as mortgages go, Fannie and Freddie is no longer allowing that as a reasonable funding strategy. But we will provide it in your SIRS because we have to by the statute. Fully funded. So I'll say I've heard this definition used two different ways. Someone will say, Jordan, well, we're fully funded as far as SIRS goes. And what they mean by that is they're fully funding the amount that we recommended for structural and non-structural. So let's just say we recommended $100,000 for 2026, and that's exactly what they're fully funding. That is true. That's not what the, like I said, international CI standards means by fully funded. Fully funded means that 100% of the money is accumulated in your account based on the proportional cost of life that has expired. So, for example, say you were going to replace your roof for $10,000. That's not an accurate number, but just easy math for now. And 5 years has passed. You would need $5,000 to be fully funded for that particular asset. So the equation is there: current cost by effective age divided by useful life. And you would do that for all of your assets to determine what that fully funded amount is. And I'll provide some examples in a second here of what that looks like as far as a funding strategy in a real application. But it is the most conservative. It definitely costs the most. Threshold funding is what we recommend, and threshold can be arbitrary sometimes. You could say we're never going to go below $100,000, $200,000. Our reserve advisors, our recommendation is we never want to drop you below 10% of expenditures in a given year. So, for example, if you're going to spend $1 million, we'd want that $100,000 cushion, that 10% in your reserves for projects, additional scope, things like that. And for other reserve components other than just that particular one you may be replacing. This here just kind of shows you the cost to fund as opposed to the risk level. So as I mentioned, baseline is probably the most risky, fully funded is the most conservative, but also the most cost to fund. So threshold is usually right in the middle of the two, which is why that's our recommendation usually, but many providers do recommend fully funded or provide a percent funded to kind of show you what that is. And we're happy to do that too at Reserve Advisors, but threshold funding is our standard recommendation in our reserve studies. Okay, so we're going to go over just a quick example of the three. So this is baseline funding, and I will draw your attention to the 30-year funding amount and the annual owner contribution and how that influxes based on what strategy you're choosing. So just to kind of high level point out how you read this chart, the bottom blue bars are your reserve expenditures, so what you're spending money on. The green is the recommended reserve contributions. So you can see that those are more or less constant throughout the life of this analysis here. And the red is your year-end reserve balances. So you can see roughly 2051, you draw that down to 0. Maybe some people say, I don't care what happens in 30 years, but this is the cash flow analysis. So why would we draw it all the way down to 0 when we'll go to threshold in a second? We can have some cushion there for a slight adjustment to the annual owner contribution. So this is why this is the most risky, because if you're off in that given year, you can actually drop into the negative. So we'll go to threshold here and show you what that looks like. So if you recall on the last slide, the annual owner contribution was $132. Here it's $141, so $9 difference per owner per year in this example. And you can see in that critical year in 2051, we actually have a little bit over $100,000 still in cushion, contingency, if you want to call it, for that project in that given year and for the projects going forward. So, like I said, it's the most lucrative. It offers the most, flexibility for, in this case, $9 more a year per owner. And then we'll jump to the fully funded. So you can see that jumped to $213 per owner. And you can see in that same year we're talking about 2051, the association has $1 million. So of course it takes a while to get fully funded. You can see that's when it kind of starts getting to 100%. But we would ask that association, why in that given year would you think you needed $1 million when you're only spending max $250,000 in any given year? And they'd probably agree with us and say, that's probably way overly conservative. We may have actually excessive funds, which reserves are supposed to be adequate, not excessive, to achieve that 100% funded amount. So you can see the percent funded gradually from year 1 in 2023 in this example slowly climbs to 100%, but their expenditures level off after 2048. So why would we still need that $1 million? It might be, overly conservative. So Casey kind of touched on this, but what is considered a completion of SIRS? I'm going to take this a step further. So the industry standard is when we send a report, 99% of the time it's complete. So it's usually going to be anywhere from 60 to 100 pages, and include all of the CIA standards and this items that are needed by that are governed by the statute. So that starts the clock on the 45 days to report to your owners and the division. Well, you may say, Jordan, well, we're not happy with what you provided. It's way more than we thought. We have some sticker shock in a way. We don't feel you may have missed this, or we want to get a proposal from a roofing contractor to kind of question or confirm your pricing there, and happy to take a look at that and talk to the contractor as well. Second option would be to get a second opinion from another provider. But step one should be communicating with your provider, expressing those concerns, those things you don't agree with. Probably a week or two after you receive the study, review it, send those concerns to the provider so that you can still stay on track. Because once that 45 days comes up, we provided a full comprehensive report that needs to start getting filed with DPR and shared with the residents. So really, I would say the earlier the better, but there's about a 45-day window to get that revised so that you can share that with your owners. So Casey also alluded to it. The state requires at least a SIRS be conducted every 10 years. National standard is 3. And you can probably see why. Inflation 4 years ago was in the high 1s, low 2s. Now we're probably pushing closer to 4%. So you can see if your study is getting older than that, how the estimates may be deviating from reality as far as what current prices are today. So that's really the reason why we suggest that you update sooner than 10 years. And then as well, if you choose to defer funding for to take on the milestone repairs, after that you would need to update your reserve study to make sure that you're still on track or get you back on track. If the SIRS was performed before the association approved a special assessment or secured a line of credit, we would need to update that. I alluded to that. So if you needed a special assess to replace your roof, that would warrant a update to the SIRS. And the last one, it's a little bit of a gray area, but the budget does not align with the most recent SIRS. So maybe you had to tackle a whole bunch of projects in a given year. Now your balance is lower, but you accelerated those projects by 2 or 3 years. In that case, it'd probably be lucrative in your best interest to get that SIRS updated because you tackled those projects earlier than you thought. It may have been a burden at the time, but now your SIRS, what's required for you to fund, may actually decrease as opposed to the previous report. And we're happy to answer those questions. I'd be happy to look at other providers' studies and see if my opinion is you updated, or if you're good for another year. I'll give you my honest opinion there, especially as you start to incorporate these numbers into your budget for next year. So feel free to reach out with that. But it is a little bit of a gray area. Once again, consult with your provider, consult with your attorney on what would warrant an update. Sometimes it's cut and dry, and sometimes it's not. So this is just the benefits of keeping your SIRS current. So you see that solid framework. Most boards turn over. I know some of you are very long-lasting tenured board members. That's fantastic. Some associations have that turnover more often. So providing that framework to the next board and kind of giving them a handoff of what they can expect is great. So everyone's kind of looking at the same things from board to board. You avoid surprises. Some things are inevitable. We can't. I wish we could predict everything, but sometimes we can't. But you're in a better strategic position if you do have to take on one of those surprises, especially using pooled method to tackle that project and then get your contributions back on track. You minimize complaints from the owners. They're very in the loop. They know exactly what's going on. They know they can plan for the contribution amounts or the assessment amounts that you're requesting of them. So the more in the know, the better. And then over time, it actually reduces the cost of ownership. Less special assessments, less loans need to be taken with interest, lines of credit. So I would say happy owners if the more that they're in the know, and the more that you capital plan. And that's the end of our presentation there. I'm happy to take some questions. We have about 15 minutes, so feel free to drop those in the chat or see what we can clarify for you.
Perfect. So the QR code on the screen, feel free to fill that out. Like I mentioned earlier, this is a 1-hour credit for managers and board members. If you're a board member, it's going to ask you it's the same questionnaire. So just skip the, CAM number and all that and just fill out what pertains to you. And we'll try to get those certificates out to you. And to make it easier, I'm also going to drop in the chat the link to the exact same page. That way, if it's easier for you to do that, feel free to use that.
So it looks like we have a question here from Judith. She's asking if you could clarify, if not funding non-structural reserve, do we need a vote or not?
Yes, to partially fund non-structural would require a membership vote, whatever percentage that is, or not at all. So it is the board's responsibility to show them what a comprehensive funding plan would be, and then the board can determine, okay, well, we're not going to fund X, Y, and Z, and propose that to the board to the membership to not fully fund the non-structural.
All right. They're asking, how do they get access to the slides, if that's even possible? Is that something you guys share?
Yeah, if we can if you would like to send us an email if you want the slide specifically, there's a recording, right, Michael, to the webinar that we can
Yes.
share as well? Perfect. I am trying to paste the link into the chat. I don't know why. I guess it doesn't really take links, so we can
You
also
could give it to us, and we'll include it in
let's do
the
that.
email that comes out afterwards.
Perfect. That works great. I'll still leave the QR code up in the meantime.
Yeah, great. So let's see here. There's a few questions. Okay, so Randy, do you have the link to see my association listed in SIRS report with the DPPR?
Yeah, we can include that too. Why don't we send that to you, and when we send the follow-up email, we can include that on there as well.
All right, and
And
Vanessa
I'll
had a
include
question.
the manual as well. I see that link didn't populate as a link, so we'll send the training guide that was provided by DPBR also.
Oh, okay. I was actually able to open it up. I
Okay,
copied
great.
and pasted the message. It took me to a search view, but the one on the top was the item that you mentioned.
Great.
So Vanessa had a question. If the building is over 50 years old and has original plumbing, electrical, and generator and useful life needs 3 hours ago? I'm not sure.
I'll kind of jump in, I guess, what I think the question is. And so electrical and plumbing, we usually give about a 70 to 85 year useful life. So if the building's 50 years old, plumbing and electrical should definitely be included in your reserve study. That is a critical structural element. So once you start getting into around 40 to 50 years, that's an item that should be included and really start funded for in partial replacements as needed.
All right. Linda had a question. The 3 types of funding reserves, if claim the middle option, is this based on how we fund each year?
I think she's referring to threshold funding for that, Jordan.
Sure. I'll clarify that. So threshold is our recommendation. The other two are valid by the statute. But threshold, as we kind of showed in that the example, is the middle ground between the two of risk and how conservative you want to be. So as I mentioned, the threshold is more or less can be established by the board. In a way, it's arbitrary. Some associations don't want to draw up, but like I said, a specific dollar amount. Some are more percentage. Some are a percentage of percent funded. They want to be 70% funded at all times. So establishing that threshold is really up to the board. We're happy to help determine what that is, but in a way, it is arbitrary what the threshold is.
Okay. Another question was, do you have info about reserve requirements for structures 2 floors or less?
I'll take that one too. So 2 floors or less, 2 habitable stories or less wouldn't fall under SIRS. We recommend you still get a traditional reserve study. If you're wanting to break out structural and non-structural still, that way you know based on this presentation what those elements are. We as we're happy to do that. Other providers may not, but I kind of see where the question is going is how do we know what is critical for us to fund for, even if we don't need a SIRS? I'll talk to your provider about that, but trying to establish what's critical, even though if you are a 2-story condo building is still ideal. So like I said, talk to your provider about how you can break that up in your reserve study. It's definitely doable.
There was a question about consequences if you are not able to commit or achieve the goal in over 10 years.
As far as I guess the reserves, how often to get the reserve study or the funding portion?
If it's out of date before 10 years, they're asking what are the consequences?
Sure. So If you received it within the last 10 years, there's no consequences necessarily from the state, but as I mentioned, inflation and market conditions will likely catch you. The further your reserve study gets from that snippet in time of the reserve study, the further it deviates from reality. Not always the case. You could track that on your own once you receive the reserve study to see those funding balances and what the provider projected you would be as opposed to where you are, what projects were completed. But the consequences are you're likely underfunding if you're deviating from the plan, and two would kind of be like Casey alluded to with Fannie and Freddie of maybe not being in compliance with that for selling of units. So there's a few consequences there, not necessarily from the state, but as far as deviating from the funding if you wait 10 years to update.
All right. And just a reminder, we're going to be sending an email afterwards if you're not able to leverage the QR code on the screen with the link to get the credits for this course. All right. So before we wrap up, I want to make sure we don't miss this because I know many of you have been thinking this is helpful, but what do I do next? So for anyone on the call that wants to learn more, ask questions specific about the association and better understand where they stand, what's the best way for they to reach you, Casey and Jordan?
They can reach us by email. We could type it in the chat. I'm sure we can also send that information as well after the webinar, Michael, but
Yep.
they can call, they can email us, whatever works, and we'll get the answer and help them out.
Perfect. That's extremely helpful. And for everyone on the call, we'll also include again this information so you get it in our email that comes out. And before we wrap up, the goal of today's session wasn't just to give you information, it was to give you a clear path forward, because the associations that take a proactive approach to reserves and SIRS are the ones that avoid the biggest challenges down the road. I want to thank Casey and Jordan from Reserve Advisors for sharing their expertise. And thank you all for taking the time to invest in your communities. We'll follow up again with additional resources after this session. Have a great rest of your day. Bye, everybody.
Thanks, everyone.
Thank you.